Hi guys, good day guys. Welcome to a new video. In this video, I'll be doing the midweek market up review as we normally do on Wednesday. But today's people, so just record this video. Won't have the normal meeting. Just trying to be flexible a bit so that to help you. Some of the guys, if you can't make it for the meeting, then you just watch the video and then be able to follow up on what's happening within the group and then in the market and the community as well. So without any waste of time, I'm just doing a review of what we've actually looked at in the previous video. If you can check, I did analysis of gold and analysis of Nasdaq, and looking at this structure here is our descending channel, and price had been moving in a way that it touches here at the bottom is your area of support. So basically by Monday or rather Friday last week, price was trading within this area. So we're actually expecting a move to the upside. But before that, we just needed confirmation. And then price gave us a confirmation by just making this just aggressive move. First, it formed this reversal pattern here, descending channel, and then after that, it's just impulse upward. We actually expected price to actually begin to correct upwardly, but now it's something different since we know anything can happen in the market. Anything can happen within the market. So we don't just force price to do what we want it to do. We wait for actually it to do what we want it to do, and then we act upon that. Okay. So I just wanna show you here to say on gold after this impulse, basically we expected the correction the downside to give something like of a bullish flag so that we able to enter going to the upside. But nonetheless, opportunities did come, although they were not so clear. But yeah, if you actually consistent and sharp with your analysis and you just avail yourself as price is moving during the day, you can see that there was actually an entry here, very clear one. See, after this impulse, then there was this correction here. See this correction. This is an entry. This is how you enter. After you actually identify the direction to say this thing is going up, after it has given you a correct what confirmation. So this was the whole impulse, and this was your correction. But I had expected the correction to be something bigger, but the price didn't do that. So right now, gold is still trending upwards, but now where it's at, it has met this area of supply here. Actually, this is a key area, resistance area that push price down. So you can expect it to fall here, maybe, but in falling, it will be making correction because this thing still needs to go up and touch this trend line here on top. So this is what we have on gold. This is what we review at gold. Just keep on monitoring it. Still expect more moves to the upside. So when you see these shapes like this one, they won't be clear as it is in the book. When you see shapes like this one, you begin to see this red candle price bending downwards. That's when you know that it's your time to what you execute. Just buy, put your close tight, and then expect for the next impulse. Is it correct? Keep on opening it. You see your profits going down. Expect another impulse to the upside. So this is it for gold. I'm just gonna quickly go to Nasdaq to see what we have there. We quite have the same thing as well. I'm just gonna take it to the 4 hours. You see, we started in the 4 hour. Remember, we still have this structure here, same structure in the 4 hour. I spoke of this impulse, this whole thing here being a correction. We expect another impulse. So as from Sunday, price was actually within this area as well, and then we're expecting a move to the upside which is what we had there, which is what we locked. So I just want to show you where we're expecting an entry. So just take it to 4 hours, and then remember I spoke about this inverse head and shoulder here. It's still there, and then after that I just mark these two critical areas. Was first this one, and then the second one was this one. So if you can check correctly, go and watch the previous video. You'll see how this played out as I anticipated it and how I actually explained it. It played it exactly. Don't always be like that. And this actually to show you what we are doing, what we're trying to achieve within the community, to say we're not doing guesswork, we're not being impatient, we're not forcing trades out of a place that you don't see opportunities. That's why sometimes I will take a day or two before I can send analysis, because I don't want to force analysis, force a trend line, force an area of supplies, things that are not even there. But what we anticipated, because price was actually somewhere here on top on Sunday, or rather, yeah, on Sunday, yes. So it dropped down. I expected it to drop, come here and reverse, and then it didn't reverse here. It kept on going down, because this was our second. This was the first area of entry, and then this one was the second one. So it actually came and respected this area here, and then it's when I executed where you could have executed as well. So maybe I didn't get a chance to update you there when it happened precisely. But if you just watch the visuals and follow up exactly on this, there's no way in which you can miss these entries, guys. And then from this entry, price just push all the way up. Okay, so I closed actually some of the position here, because this is a key area as well of supply. You can expect price to reverse. And another thing to note, it's there's actually double top that is being printed here. A double top, it's a reversal pattern. So this is where you should watch out, to say you don't want to enter yet or find anything. You just need to observe. Say this is the double top, and this is the neckline of the double top. So what I want to see here is like price coming all the way down here, breaking out there, and then retest. Maybe it can reverse to the downside. But the bias actually here, is that price will at least come and touch here on top the trend line. Okay, and then from there we'll see how it happens, how price actually develops. But there's another thing that you can note very quickly. Basically, also the impulse here and correction. This was giving you an entry impulse, and then another correction here, although it was not a clear one, and then was giving you an entry. You can still say this is an impulse and then correction. It's another entry. To you can make an entry to the upside, but I'm advising, like, can advise you to stay away here, just because of this double bottom here. So I think, especially with Nasdaq and some the other indices, they actually respect these patterns: double bottom and double top. If I can find one very quickly, I can show you where price just made. See something like this. You just look at this. This is a double bottom here. Although it's a skew one, this is the first touch, and this is the second touch. And these ones are actually very effective. This kind of double bottoms. So that's what price did there. So what I wanted to show you before I move on to the next financial instrument, with Nasdaq, I see a reversal structure being formed here. I'm just going to update you on that, but I'm not really a fan of taking bearish moves like a sell when it comes to Nasdaq. I enjoy more, like, I prefer taking bullish positions, like buying on Nasdaq, than to sell, because this thing most of the time is going up. So I think we are forming this kind of reversal structure here on top. But if it's gonna sell, I'm just gonna observe. But if you want to take a sell here on Nasdaq, this is the way in which you can take it. See, this is the touch here on top, 1, 2, and then you can go up there, make a third touch here, maybe it falls out of this trend line, and then after that we reverse downwards. When it breaks out there on your test, that's when you sell, because it will be what, a breakout in a form of impulse downwards and then correction, and then you can sell. Then if it corrects again, you can open another position here and then descend with the Nasdaq downwards. For now, you can leave it at something like this structure and observe what happens, what's going to happen with it. But there's not much happening. Actually, it gave us the profit that we had expected from it for the week. So for now is to observe, analyze, and look for another opportunity. So last one I'm just gonna look at is to click on EURNZD. Basically, this is the instrument that I analyzed today. Let me just quickly go to the daily. I made analysis of this instrument, and I dropped the video in the morning. You can watch it in the group. And if you're not in the group and you're watching this on YouTube, just inbox, leave a comment, or leave the contact details as well. You can contact me and then can discuss on how you can join the community and be trading with us. So we have this ascending structure here for Euro in the daily, this being our lowest point, our area of support and our area of resistance here on top. Basic stuff that we do. Just make it very simple, and then you go to 1, 2, and I think we're making a third touch here at the bottom, and then at the top with 1, 2, 3 touches there on top. You can count this one in the middle there as a touch, although price didn't really touch there, but yeah, it still gives us something. So when you take it to the 4 hours, just observe this structure here within the structure, pattern within the pattern. Observe this descending channel. Okay, descending channel, if it breaks out, we are expecting a move upwards. So if this thing is gonna break out like this, the EURNZD, it will be time for us like to eat. You just have to hold firmly to it. Just open those positions, monitor it. If I don't get a chance to show you, tell you to say now you can buy EURNZD, but now I'm giving you the skill on how you can catch this. So in the 1 hour, something that we'll just comment on lastly, just look at this guy here, your old friend. This is a double bottom, so it's another reversal pattern. So you're just ending actually using more information for yourself, what you know, using it with what you know as well. Just these things complementing each other. So it's the first touch here and the second touch. If this will be a breakout here out of this double bottom, breaking out. This is a neckline here of the double bottom. So you just let it do whatever it does. If it breaks out, let it trade upwards, because basically this whole thing will be an impulse, and then you wait for that correction. That correction, it will be coming neckline of this double bottom. This is where you execute, you buy, or maybe yeah, to be retesting the trend line there. It's another scenario, and then you buy, put your stop somewhere tight there within under the neckline of the double bottom, and then you take profit. Is the 90% zone, the year on top. It's actually here. It's where this channel started. So basically, look at the risk to ratio reward 1:17. I know it won't come easily, but you have to wait. It's one of those that you'll have to wait for it to get there and then give you the profit. But these are the type of trades that we should be taking, that we take within the community. The risk to ratio should be 1:5, somewhere above that. If you look with Nasdaq, I can just show you the risk to ratio reward of the previous trade that we actually took. See, it was somewhere here, and the stop loss, we had kept it tightly here. You see now, risk to ratio reward is 1:4. You see, it's something. 1:4, 1:3, it's something you can deal with that. But 1:1, 1:2, you actually is gonna be, you're gonna be playing around with your emotions and all that to make a lot of trades in order to be profitable. And the same for gold. I think with the entry here, of which we didn't catch because the price moved very fast to the upside side. But if you catch that and you check that, look again, it's 1:5, and this is the minimum that it can do, because this thing can still go up and make a touch there on top. But we don't want to be that greedy and that aggressive. But if it reaches there on top when you bought and you're still holding, it's 1:10, big risk to ratio reward. Um, yeah, this is it, guys, for today's video. Hope you enjoyed the video. Like and subscribe to the channel if you haven't. So thanks a lot for watching. I'll see you in the next video.